A lot has been said about how AMCON has rescued Nigerian banks and provided a fresh lease of life. But on this episode of the program, we take a look at how AMCON is engaging companies like this. Sparkwest Steel. This is one of over 9,000 companies owing AMCON trillions of naira. On this episode of the program, we take a look at how AMCON is engaging companies like this to not only stay in business, but to pay back their debts. There's little doubt AMCON, Nigeria's bad bank, will go down in history as the main institution that helped stabilize Nigeria's banking sector by buying trillions of naira in bad loans from fragile banking institutions. But this legacy seems likely to transcend its impact on the financial markets. As a public institution, AMCON will also be viewed in the light of its social impact and how it affects the broader economic activities. Indeed, several critical sectors of the economy, from aviation to oil and gas and to the capital markets, are exposed to Nigeria's bad bank. AMCON's engagement with debtor companies in these sectors could determine if it will be viewed as a catalyst for economic growth and job creation, or a spanner in the works for companies already struggling under the pressure of large debts. As AMCON takes on the challenge of collecting from debtors, it has to balance any social responsibility with the reality that in a few years, it must raise trillions of naira to pay back holders of the bonds issued in exchange for bad loans.
AMCON has a funding model, and in the funding model of AMCON, it is expected that recoveries of these bad assets or these bad loans in our books will constitute about 25% of our funds, of our inflow. We have so far done 3 rounds of purchases of loans from the banks. We have taken in about 3.5 trillion naira worth of loans, for which we paid about 1.7 trillion naira to the banks. That represents about 44 kobo for every naira. That is the discount we have gotten for these loans. Now, the number of borrowers today stands at roughly around 12,000. Approximately about 3,000 will be individuals and 9,000 of them will be corporate bodies. Now, these borrowers, we have done a segmentation and have seen that they have cut across most of the sectors of the Nigerian economy. But the 3 largest sectors of the economy where these loans reside are capital market, oil and gas, both upstream and downstream, and general commerce. And these 3 sectors account for about 65% of the loans in our books. You know, in Nigeria, borrowers take loans from, one person can take loans from several banks. So the largest we have had is a company that took loans from about 10 banks, and the value is about 200 billion naira. Now, the lowest, we have loans that are as low as 100,000 naira, but those are mostly share loans. Those workers who have been convinced to buy share loans, but somehow along the line, maybe they lost their jobs or they lost the capacity to repay those loans, and the banks sold those loans to us.
One of the over 9,000 corporates owing AMCON is Sparkwest Steel. Debt-ridden, this startup company struggled for years under the pressure created by a weak financing structure that left it owing several banks billions of naira, debts that were ultimately transferred to AMCON.
Sparkwest is the pioneer manufacturer in Nigeria of fabricated and galvanized structural steel for the telecommunication and power sectors. A lot of the cell sites that you see and the power transmission lines are things that Sparkwest is able to produce in Nigeria. Sparkwest, prior to AMCON's intervention, had been financed by a syndicate of 5 banks, and AMCON, in collaboration with one of the 5, Access Bank, restructured the debts. Of course, AMCON took over the obligations of all the other syndicate members barring Access, and in collaboration with Access Bank did a comprehensive restructuring of the company. Prior to the restructuring, the company was indebted to the tune of about 54 billion naira. The AMCON and Access Bank intervention reduced the debt obligations to about 36.5 billion, resulted in the conversion of some debt into redeemable preference shares, which are now held by AMCON, and it therefore created equity where there was none. So where we had a basket case balance sheet before, now we have a balance sheet of a company that has a fighting chance, a real fighting chance in the market. New equity has been subscribed to, And in addition to that, additional financing to the tune of about $50 million has been provided in terms of working capital facilities for the company to operate.
We have realized that there are some companies that can do well given some changes in the conditions of their loans. Spark West represents one such example whereby the burden of the loan is such that it was mostly the banks gave them a short-term loan, when what they needed was a long-tenured loan. So what we had to do was to restructure it into a long-tenured facility. Now there was the issue of even debt service capacity. We realized that given that it is an upstart company, that they cannot afford to pay the principal and the interest all at once. So we did some conversion. We converted some of the loan into equity, introduced better corporate governance in that company, and in the process also we realized that they needed more working capital, and because now we are sure that we have introduced stronger corporate governance, we can now help them to have access to more working capital facility.
AMCON's engagement with debtors like Spark West Steel must surprise many observers given the rhetoric from the central bank and AMCON itself about a determination to collect from debtors. After AMCON was set up in 2010, the central bank governor Sanusi Lamido Sanusi cautioned the markets by declaring that AMCON will be an aggressive debt collector. Such comments must have frightened many debtors, and some initially tried to avoid the stigma associated with becoming an AMCON debtor. However, Spark West's management and workers will tell you that owing AMCON is not so bad after all.
When we started well, but along the line there was challenges that faced the company. And around that period of time in our areas here, the materials that we are having, scanty. But if you look around now, there is a little bit, a big change.
Things have really changed immensely. When AMCON took over, we've been able to fizzle out certain problems we've been recording in time past, such as downtimes of machines, low output from production, etc. Now, when the funds came, for example, this machine that we are very close by to now, the DZB machine, was down for over 6 months, and we were unable to fix it because of unavailability of funds. When these funds were injected, we've been able to fix the machine, procure the required parts, and for other machines to be able to have work done on it. We've also been able to procure new machines. Some of us were privileged to have been sent to Italy for training on the newly installed Tipo machine over there.
In the past, I used to write a lot of mails asking for raw materials to do my job. But today, many a times I don't even have to worry about those raw materials like the LPG, like the zinc ingot, like the acid to make all my processes. They just come as at when due.
Today we have a little over 300 families in the locality of the companies. Spark West is based in Shagamu, which is in Ogun State, just outside Lagos. 300 workers who prior to the restructuring had been owed, in some cases, 8-9 months arrears of salary, who can now receive their salaries on a regular basis. Arrears have been cleared up, and those people have a livelihood that they can look forward to. With the restructuring has also come an upgrading in the facilities. We have reinstituted training and development. The quality of the procedures by which a company is run have been upgraded to meet quality standards. We've exported towers to Gabon, we've exported towers to Cameroon, we've exported towers to Central African Republic. We are negotiating exports to Rwanda and Botswana. And we're in the middle of discussions that may result in Spark West actually being nominated as a supplier to 2 of the major networks who are doing rollouts across Africa.
Spark West's turnaround story reflects AMCON's commitment to pay attention to the peculiar circumstances of its debtors as it tries to recover non-performing loans that banks had struggled to recover.
Non-performing loans that come to AMCON, by their very nature, are loans that are troubled. They're difficult to collect, and in fact, in many cases, the banks have tried to collect these loans and have been unsuccessful. We engage the debtors on a number of fronts, and we try in our minds to classify many things about each debtor. I'll give you an example. The first thing worry about the debtor is, can he pay? Is there any conceivable way he can pay what he owes? Is our first question. If the answer is yes, then we ask him to pay. We try and compel him to pay, force him to pay. If the answer is no, the next question is, how much can he pay? That's the second question. The third question is this guy in an industry or business that has any other benefits to the economy? If this person is employing, it's a very labor-intensive business, employing lots of people, and there are other benefits to the economy to keep this guy in business.
AMCON is a unique institution. Of course, there have been quote-unquote bad banks created elsewhere in the world to help clean out the banking system and resolve the debts, and AMCON has done that very well. What is interesting about their contribution to the economy is that they've gone about restructuring some of these assets in a way that gives the owners breathing room, and actually enables them to continue to function and eventually, be able to, look forward to either resecuring these assets or, continue to benefit from having them, because AMCON has done that restructuring that gives breathing room. So this is also good for the economy, because it means that these owners of some of the assets can continue to employ people and have an active presence in the economy, which is actually in some ways quite unique as well.
But while AMCON tries to accommodate the predicament of its debtors, the weak corporate governance in Nigeria's banking sector prior to the most recent crisis meant that many questionable loans that could be described as designed to fail were also created. For these type of loans, AMCON is less willing to make any concessions to debtors.
It is recognized even by the lawmakers when the AMCON Act was being promulgated that there are some loans that were not properly approved or were given to friends, insiders, and so on, or did not follow laid down guidelines. That's why in the AMCON Act, there is a provision for what is called tainted loans. A tainted loan is a loan that is not properly approved. But those loans do not account for more than 5% of the total loans in our books, the tainted ones. And they are treated separately and seriously, and there will be no concessions to the owners of the tainted loans. Now, there are also loans that were not designed to go bad, but had to go bad because either there were changes in the business environment for those customers, or because the banks themselves created the conditions for default. I'll give you an example. There were several real estate loans in our books that the banks gave offer letters to the customers and said, we will give you loan to buy the land and loan to build, and that the repayment of this loan is going to come from the sale or from rent of the finished properties. But no sooner had those developers started building, some were at foundation stage and so on, than the banks themselves had liquidity challenges and they could not keep funding the project. So the projects were at different stages of completion. And there is no way the borrowers will pay because the project has not been completed. So you can also say that the banks had contributed to the default in some cases. But the ones that are designed to fail are the tainted ones, and they are the ones that will pursue the borrowers to the last kobo.
After the break, we find out how AMCON rescued an aviation sector on the brink of collapse.